Hey everybody, I'm Jer. Welcome back to Stock Voyager. So, we're going to take another look at Sopa. I've been talking about Sopa over a few videos. Society Pass. Originally, I thought, and I still believed, that Sopa could go to 90 based off of short interest and based off of short borrowing fee. And but to get Sopa to 90, there were some things that needed to happen. The energy needed to stay there. We needed to be able to keep enough people holding the stock long enough to get shorts to cover to make the stock spike. And make the stock spike enough and stay spiked enough to be able to hold so that more shorts got in and cover, more shorts got in thinking, oh, this has got to go down. And then they have to cover eventually, making it go up even higher, and then so on and so forth, and just keep repeating that cycle. But the first step of that was that enough people had to hold, because there's a limited amount of shares. The float is low, so you had to have enough people just holding the shares. That didn't happen. That hasn't happened. And instead, you've seen the stock kind of gradually slip. Now then, looking at the stock the last couple of days, you kind of see where it found what looks like support, and you might see kind of a reversal. We're going to take a look at that. Let me pull this up real quick. Okay, so here we are. This is what Society Pass is doing today. It's down a little bit from where it was at. Now then, but it is up from where it was on the 5th at 823. If you look at them, like here, you see it got to 823, then went up to 891, then 841, then gradually kind of worked up to 895, and then 925 yesterday, and then now we're at 924, it looks like. Okay, and previous close was 925. So, what you have to, okay, so if we look at the month, it kind of looks like it's found support. And that's great, because it has stayed around that $9 range now for 3 days. So it looks like it has hit its bottom. However, and if enough people hold this, it can spike again whenever more shorts start to cover. But you're going to see it kind of fluctuate here, like you're seeing now. It went to 911. Let's go back to 1 day. So it's kind of just sitting there. My opinion on it is that if I were looking at it, I would want to see it kind of spike up some more and maintain before I got in. But I don't think I would get in still. Like it's been kind of a wild ride down. Like it was up near 16, and then we needed it to go back up and stay above 16, and it tried on these days. I remember it trying on these days, but it couldn't get back up above 16 and stay. So it's kind of a resistance at like 16, and then it did this, and it started resisting at like 13 on those days. So it's gradually just bleeding out and going down. Could this be a bottom support? Yes. But you have to remember the numbers and remember the risk of getting in and just holding. Like you want enough people to hold, but you don't want to be one of those people holding. It sounds crazy, but that's how it is. Like, because if you end up holding too long and it keeps on dripping and it gets down below 9, then down below 8, and down below 7, it ends up back down here at 330. And you end up holding a stock that you got in at maybe, 12 or 11 or whatever. And now it's down to 330 and you've lost 75% of your money that you could have been using somewhere else. So I say that you could probably play it day by day, doing trades, trading it. But I don't suggest holding it. Again, I'm not a financial advisor. I'm not your financial advisor, and I can't tell you when to buy or hold or sell. I can tell you what I would do. And my opinion now is to just avoid it because there's so much risk to it. Because if you scroll down here, remember this company has only done $103,000 in revenue, and they've lost millions. This quarter they lost $8 million and had $83,000 revenue. They lost $4 million on $7,000 revenue. They lost $2 million on $9,000 revenue and lost $1 million on $2,000 revenue. So if this trend continues, then it's not good for the company. Can they turn around? Yes. Let's see. Now that we're at, what are we at? 895. So be very cautious. To me, if I were in it right now, I would sell and be done with it and wait until there's some more good news and then maybe get out and play it again. But without any good news, you don't have enough hype behind it to get it above 9 and keep it above 9 and get it up higher than that and go so on and so forth. So I would just play it safe and not have my capital tied up in Sopa. My opinion. You can do what you want, but I would avoid it. I would stay away from it just because there's so much risk involved, and the market cap is currently at 170 million, and that's off of $103,000 revenue. So you're looking at, I don't know how many times revenue that is, but it's a lot. So be careful. I say just avoid it. You can do whatever you want. If you're in it, I would sell it and just be done. But again, maybe you see something I don't. You can also realize and know that that there's a large percentage of the shares locked up. So the float is much lower than what's showing. I believe it was 63% of shares are locked up until April. And then it's really going to go, it's going to be kind of a bad thing, I think. So do what you want, but I would avoid it. If I was in it, I'd get out, cut my losses, and use my capital elsewhere. Just my opinion. Again, you can do what you want, obviously, but that's what I say. It looks like it's kind of a reversal, but I don't think it's worth the risk of getting in or staying in. Just my opinion. Don't hate me for it, please. Okay, that's all I have. If you haven't yet, be sure to subscribe, and I'll see you very soon. Love you guys. Bye. Mwah.